Oliver, we saw Friday kind of leave us on a sour note, and this morning come back in a little firmer note. Do we think this is maybe end of one quarter and start of another?
Well, I think that's certainly part of it. You're closing one playbook and opening up a new one as we start a new month and a new quarter, as you had mentioned. So I think some of last week's volatility, not just in the grain markets, but looking at some of the other sectors as well, energy, livestock, et cetera, just a lot of money flow moving around and creating a little bit of volatility. And now we're seeing the markets bounce back a little bit to start the new month, which I think is very encouraging. We did get some flash sales this morning. That certainly helps the grain markets. About 8.2 million bushels of corn sold to Mexico. So that sparked a little bit of optimism this week. And a flash sale for soybeans as well, 4.8 million bushels to China. So some good news coming across the wires. What we really need to see is more numbers like this on a more consistent basis. Hopefully that will come in the near future and help keep this market moving north. For the corn market, though, still in a range, 470 to 490. We need to kind of get a breakout or a breakdown to give this market new direction. If we are able to get out above 490, that could spark some short covering from the funds who are currently net short about 170,000 futures and options contracts. And that's the biggest net short position since August of 2020.
Wow. So I know we looked at the exports, and you've had to be watching the dollar. It has literally been a straight-up market with no reprieves in it whatsoever. Has that been impacting our exports? I haven't really seemed to think that it has been in some ways, but then there's no way to think that it can't.
Yeah, higher dollar is obviously going to have big implications and be a headwind for a lot of commodities out there. And when you're looking at the grain markets, it has a higher inverse correlation to the wheat market, which can be seen on the chart there. That's one that has just been an anchor. I'm still halfway optimistic on the wheat market, but we've been working with clients who want to be optimistic and want to play it to the upside and using options. Options are a great tool if you're looking for a counter trend trade. It keeps that risk fairly limited. So I'm pretty optimistic on wheat, but really we got to start seeing some positive headlines come across that market. And potentially it starts with a dollar just kind of reverting to the mean. But at this point in time, dollar's still very strong. If that comes back in, maybe that's a tailwind for some of these grain markets here to start the fourth quarter.
Yeah, we heard John Jenkins talk a little bit about some of the wheat seedings there, and they had gotten quite a bit of that in, and even some emergence out through there. Are we kind of right about in line with our wheat seedings so far this year when we go into our crop progress report?
Yeah, I think we're pretty much right in line. We'll get a good idea where things are in this afternoon's crop progress report. That'll kind of give the market a baseline to go off of, and then it'll be important to keep a close eye on weather going forward as well. So a lot of moving parts here as we start a new month and a new quarter, but I'm sure the volatility is going to be here to stay through the rest of the year, and volatility oftentimes does present some great opportunities.
Oh, it really does, Oliver. Thank you very much. I appreciate that. Oliver, stay with me. We're going to go away, and we're going to have a commercial break, and we'll be right back with Oliver Sloop. Invite my guest back, Oliver, on here to talk a little bit about the livestock market. Do you see anything that really stands out to you for we're a really high price and got a consumer being impaled by the inflation and a Fed that's really tasked with trying to quell a little bit of it?
Well, those are certainly some big question marks here as we looked around out the year entering a new quarter. But as we mentioned in the grain segment, the volatility has really been the theme over the last couple weeks. And you can see that looking at not just the cattle charts, but the lean hogs as well. I was looking at the average trading range for the December live cattle contract, and we've been averaging a $2 range on a daily basis for about 2 weeks now. So the volatility is certainly up ticked as you get a lot of uncertainty out there, but still holding some of these technical levels pretty well. 187 to 188 for that December contract is going to be a big level to keep an eye on. A break and close below that, I think, is probably going to spark a little bit of long liquidation. Commitment to traders report from Friday, funds net long about 102,000 contracts. They've been defending a very large net long position for quite some time, despite those question marks that you brought up. So it'll be interesting to see if they look to tighten that up in the fourth quarter, or they're going to continue to defend it. I guess time will be the ultimate deciding factor.
Yeah, we've seen some really big declines in the open interest starting with last week, about Wednesday last week. And if I'm not badly mistaken, I think we're about 15,000, 20,000 contracts off the highs that we were when we were making those new contract highs last week. So it's going to be really interesting to see what the high volatility and what the participants are going to do in this price here. So, Oliver, certainly do appreciate you taking the time to come on this morning. As Oliver Sloop, and I'm going to turn it back over to Tammy now.
All right. Thanks for the update,
Absolutely.
guys.